What's up, everybody? Stocks on the rocks. What's going on? Where's that music coming from? Hold on a second. Hang on a second. What's happening? Let's get that music down on out of here. It's Stocks on the Rocks. It's Thursday night. Thanks for joining me, everyone. My name is Corey Lane. I would say that 90% of you know me, maybe 100%. But we always invite new folks to these, so you never know who's brand new. If you're brand new to Stocks on the Rocks and Traders Army, let us know. But most of you guys, you're old school. I know you guys. You're all what's happening. Great to see you. Music's out of here. Got some more folks coming in from the waiting room. So yeah, so let's get this party started, right? It is Thursday afternoon, every other Thursday at 8 p.m. Eastern, 5 p.m. Pacific. We do our Stocks on the Rocks office hours and happy hour. And so what that means is, as we approach the end of the week, we get to hang out together, talk trading. What's up, Ken? Good to see you. It's been a while. Yes, it has. Talk trading, maybe have a cocktail. You don't have to, but maybe you want to. It's kind of a happy hour type thing, hence the name Stocks on the Rocks. You know that name, fun fact, a little history. The name Stocks on the Rocks came from a time when Chuck Fulkerson, who is not here tonight, he's got baseball with his kids every Thursday, 3/4 of the year, which is awesome. He used to host this series, and we used to post it on YouTube. They're still out there, where he would do a series where he would review a particular stock setup. Maybe an option trade was attached to it. He'd review a particular stock and why he thought it was a good opportunity. And he would review some sort of bourbon or whiskey. He is not a tequila guy, so he would do tequila, but he would review a spirit and a stock. And that's where Stocks on the Rocks came from. And so when we launched our office hours or relaunched our office hours, I'm like, let's do it happy hour style and let's bring back Stocks on the Rocks. So here we are, Stocks on the Rocks. That's a long time ago, Ian, I know. It's amazing. We've been doing this for a long time. How long have we been doing Traders Army now? Since 2016, 17, something like that, 18? I don't know. It's been a little while. So it's pretty cool to get to do this still. But this session, if you're new to office hours, this session is designed to just kind of banter and talk trading, talk anything trading and investing. I come with nothing prepared to talk about. This is not a session where I'm bringing up my charts and looking around and trying to find trades and build trades. No, we do that during the week. We have 8 trading rooms starting Sunday night all the way through Friday, and that's when we do that stuff. This is just sort of a, there's all kinds of questions that you guys might have, challenges you're facing, things you want to talk about, things that you heard that you want to bring to the table. And this is a great place for us to just kind of banter about that stuff. The session is designed to go for as long as an hour. We might go a little longer depending upon what kind of questions you have. Try not to go too much longer for you guys. But if you guys run out of questions, we'll just stop early, right? I got nowhere to be. Probably lots of stuff to talk about. So if there is a desire for you to turn on your camera, you're welcome to. But I will say this, since this is open to the public, be nice. Like, don't be inappropriate. This is open to the public. I know, I just opened the door, Ian. I might have made a mistake there. But if you want to share, you want to turn your camera on and just kind of be in the group, great. If not, you don't have to. You can ask questions via the chat box, which I am watching very closely here for any questions or comments that you guys have. If you want to ask your question using your microphone, you can turn your microphone on. Again, be nice, be an adult, and yeah, ask away. So with that being said, let's kick this off. Who has questions? Who has concerns? Who has challenges? Let's go. Ken says, is that 2018 for me, Ian? Has it been that long? Yeah, September 2018. That sounds about right.
Yeah, I think I was one of the. I signed up for a month when he started.
Yeah.
And then I couldn't. You didn't have a website that worked.
Sounds about right.
Yeah, I've sent an email. I wanted to sign up for a year.
Yeah, when
He
we
called me
launched
back.
Traders
He didn't
Army,
know what else to do.
what's that?
He phoned me. He didn't know what else to do.
Well, unbeknownst to you, Ian, probably, is Chuck and I have been working on this Traders Army thing since probably 2015, maybe, where we had launched a website called coretrader.com, and then we changed it to option. No, it wasn't optiontrader.com. It was something else, optionarmy.com. And then we weren't just about options. We had futures and options and stocks. And so I'm like, what if we just called it Traders Army? Now, all this was going on, Ken, while I was still teaching for another academy, and it was against the rules for me to have any participation in any other trading related business. So I'm in the background just trying to build a website and trying to help Chuck on the front end find trades, post trades, facilitate what he was trying to build as the front end guy. And I'm in the background trying to be all secretive and stuff. And I'm like, yeah, this is going to be great one day. And it was February of 2020 when I put my notice in to stop teaching for this other academy. And what timing that was. And I was just going to brand, and now Corey's going to come on board publicly at Traders Army. And it was going to be Chuck and Corey. And what timing, because the whole country shut down as COVID was taking over everything. And yeah, so it's perfect timing, and Traders Army took off, and here we are still doing it. We're still doing it. Look at that. All right. So Raphael, what's up, buddy? Sentiment on the NASDAQ futures right now is very bullish, but the daily time frame is in the supply zone. Should I find an entry to short? What a great question. I mean, that is a great question. So let me bring up my charts here. Let's get rid of that. And I literally just had an identical conversation with somebody not 45 minutes ago, right? So everything you said is true, right? And what I feel about what's going on in the market, I feel everything you said is spot on, right? Bullish sentiment in the entire market, number one. However, we're trading up into supply. Now, part of me wants to ask. I want to ask, what time frame are you talking about, right? Because on a daily chart, we came up into this supply area here. Let me zoom in a little bit. We came over to this area where we had a drop in price from the all-time highs back in February, a little bit of basing candle. So one day basing candle at all this potential support down here to the left. And then we just ripped right through that, right? Warm, hot knife, warm butter, however you say that, it just ripped right through that. So this was the origin of the decline. And we just hit that area. Looks like on the 13th, we traded on the 14th to the top end of the range. On the 15th, we broke through it. And now we're sitting right at the top end of the range. So is this the supply zone you're talking about, Raphael? Is this what you're talking about? Yes. Okay. So I thought so. That's why I want to ask. But I want to ask some follow-up questions here. So get ready. Okay. If price broke through yesterday, didn't close above it, but if price broke through the zone yesterday, what does that tell us about the amount of supply that exists in that area? Is there a lot of supply, a little supply, or no supply? I'll make it multiple choice. For price to have broken through, and anybody is free to, I think everybody should answer if you have an answer. I think everybody should chime in on this. A lot of supply, a little supply, or no supply. I got three answers, maybe a little supply, if any, none and zero. The nuns and zeros for the win, right? It's the nuns and zeros. Let's think about this. if there were any supply sell orders in that area up to 21,405-ish, if there were any sell orders in that area remaining, then prices could not go above. Could not. It's impossible, right? 100% of the supply as high as 21,405-ish, right? Whatever the high of this candle right here is, has to be completely filled, and then the remaining demand can push prices above. And that's exactly what happened yesterday, okay? So we closed inside it, right? But all the supply in this area is gone. So if I remove that area, where are we? Right? We're basing in an area where supply used to be, right? Used to be. Now, if we're basing at the top end of supply, where it used to be, all this basing now is just equilibrium, right? Now, sellers could come in, and that's not impossible. New sellers could come in and push prices lower, but they need a reason to. New buyers, which haven't presented themselves yet, could come in and take prices higher, but they haven't yet. Maybe there's not a reason to. But the fact that we traded above that supply and we're basing sideways in this area right now tells me that the market wants to push higher. So there's where your bullish sentiment comes from the chart, and then also the bullish sentiment just from the overall momentum that we see. I'm using MACD, moving average convergence divergence. I'm using momentum of this particular indicator to gauge momentum in the market, which seems pretty strong in the NASDAQ, okay? Specifically. And I got a second point I'm going to get here to a second, which I think you're going to see the answer to your question here pretty quickly. So the next area of supply, if you go down onto an hourly chart, at this 21,743 up to 21,8, we got an hourly supply in here. But an hourly supply to me is like a piece of paper where it could break right through that pretty quickly. A daily or weekly supply, which I would argue this daily supply, which will also look like something on a weekly, is all the way up here, just under all-time highs, right? So we've broken through the daily supply already, and all this basing after a rally generally suggests further breakout is coming soon, right? Rally base, rally, high base breakouts. Anytime you get basing in the context of an uptrend would suggest a breakout is more likely, while a pullback is possible, a breakout is more likely. Now, I would love a pullback to 20,286. The positive delta part of my portfolio does not want a pullback, but for finding new opportunities to get in and join the uptrend and join the momentum of the NASDAQ, a pullback would be great. So should I set up short positions in the NASDAQ? Let me show you one more chart and you tell me, right? So I'm going to pull up a chart that I've designed, that I built, called my BM comp, right? And I have a lot of drawings on here. So let me just set up a new drawing style. And it's going to have no lines on the chart. And I want to take my contract changes, just apply that, right? Just get rid of all those dashed lines up there, right? Clean that chart up a little bit. Oh, why didn't that go away? Year markings, that's what I want to get rid of. Okay, so now what I'm showing you here is a chart that I created that is not based on price, it's based on percentages, right? Now what you're seeing here is you're seeing 4 different line charts. I'm not using candlesticks, I just want the line charts. So line charts, each one of them represents the index, right? Represents an index. So the black line is the NASDAQ, the green line is the S&P, the blue line is the Dow, and the red line is the Russell, okay? Now, this is the percentage comparison chart, which I've built to help identify who are our markets that are displaying relative strength and which are the markets that are displaying relative weakness. Okay. Now, to properly anchor our relative strength and weakness, we have to anchor from a certain point. We can't just go say, oh, let me just look back a year. So I think you would agree that the market is currently in a strong uptrend on the daily chart. I think you would agree. Now, where did that uptrend begin? The uptrend began on April 8th, when the market hit bottom, shortly before Trump put a 90-day pause on tariffs, right? But so the market hit bottom when the S&P and all the major indexes hit their weekly and monthly demand zones. So I'm going to anchor my starting point from 4.8, okay? So to do that in Thinkorswim, I'm going to go to my time frame indicator, or my time frame selector, time frame, and I'm going to anchor from a custom point, which is 04, 08, and I want to see daily charts. Come on, give me day. From 4.8 to today. Now, this shows that like four racers, starting at the same starting point, right? And guy says, on your mark, get set, go. And they all start from the same point. So what this tells us is from the same starting point, April 8th, who's been leading the market higher, who's been lagging in this race, and who's kind of in the middle, not winning, but not lagging, right? So the black line is the NASDAQ. Red line's Russell, green line's S&P, blue line is Dow Jones, right? Blue chips, technology, and I color-coded these based on my just color that I imagine with representative of the index. So I think NASDAQ, tech stocks. What do I think about? What color do I think about when I think about tech? I think blacks, titanium, silver, grays, stainless steel. So that's what I think. So who is the fifth line? So this actually, I'm comparing the NASDAQ futures to NDX, right? So NDX, you'll see if I type in NDX, those lines are the exact same. They're on top of each other. So NDX, RUT, Russell Index, SPX for S&P, and $DJI for Dow Jones. So when I put up, say, QQQ, it's going to look like two lines. When I put up NASDAQ futures, it's going to look like two lines. Does that make sense, Paul? Right? So these two up here represent the NASDAQ. Just futures, index, ETF are the three ways we could express the NASDAQ as an index. And so up top here, you see the NASDAQ. So when we all started at the same point and we see the NASDAQ outperforming all the other indexes, right? We got 25% rally in the NASDAQ since April 18th and only a 12.5% rally in the Dow since April 8th. Sorry, 8th, not 18th. What does that tell us about the NASDAQ? It's been outperforming the weakest market by 100%, right? So it's 100% outperforming the Dow. Now, why would the NASDAQ be outperforming so much? Is it because we're in a growth-related environment, or are we in a safety-related environment, right? We're in a growth-related environment, right? Anytime you see the NASDAQ outperforming the other indexes, it's because the world, and I mean retail investors, institutional investors, money managers, hedge funds, you name it, the world of investors sees the future in the market as very optimistic. If they thought the future in the market was uncertain, scary, didn't know the state of the market or where they thought the market was going to go, then you'd see the Dow Jones outperforming, okay? Because that's where all the utilities and safety related stocks and stable stocks and companies that aren't really probably going to go anywhere. These are your biggest blue chip stocks. And so the Dow Jones is usually considered to be a risk off sector or index to invest in, and the Nasdaq is a more risk on sector or index to invest in. So covering all of that for a second and talking about relative strength, Nasdaq being the strongest, and the laggard relative weakness is the Dow. Let's pretend that you show up to a wrestling party, or in the South, they might call that a wrestling party, where you're going to arm wrestle people or physically wrestle people. Do you want to bet against the strongest person at the party? You want to bet against that person? You want to arm wrestle? You want to arm wrestle the strongest? Or would you rather arm wrestle the weakest? And this is for everybody to answer, not just Raphael, who asked this question. Which one you want to wrestle? Sorry, I just have fun saying that. Depends on how hot she is. Oh, Ken. You're going to get us in trouble here, buddy. Yeah, if you want to win, you want to arm wrestle the weakest, right? I'm not trying to go up against the strongest person in the room, right? I really know how to throw a party. That's right, Steve. Now, the weak redneck. Now we're going down redneck. Redneck might have a better technique. They might, right? So this person could be a shark, is what you're saying. They might pool shark here or something like that. That's possible. But if we're talking about you want the highest probability of winning this match, I'm certainly not going to, at face value, choose the strongest person in the room to wrestle against. I'm not fighting the strongest, right? So while I would agree with you that this index has reached its supply level and it might be a good shorting opportunity from a probability standpoint and a sentiment standpoint, you're kind of betting against the strongest player. So it's not the highest probability short. That makes sense, right? Now, the fact that the indexes are coming up into supply is important to note. So if you're looking for things to short, then I would dig into specific stocks that have been showing relative weakness in the overall market. So what does that look like? So a lot of the indexes are trading near their all-time highs, not too far away from them. Are there a lot of stocks out there that have not been able to rally and get out of their downtrend right now? There's a lot. There's quite a few, actually. So a lot of stocks have been going up, but a lot of stocks have been going up out of sympathy. Weaker stocks, specifically. Weaker stocks have been going up out of sympathy for the whole market to be going up. They're just like, okay, I guess we'll go up. But when the market shows any hint of weakness and things start to turn lower out of these supply zones, what do you think those weak stocks are going to do? They're not likely to go up and buck the overall trend. They're likely to go down. They're likely to go down faster and be the leaders to the downside, right? So while I don't hate the idea of shorting something as the indexes are approaching all-time highs and approaching these major supply zones, I would be very cautious and look for some confirmation before we start shorting indexes with the upward momentum that we've been experiencing, and just the lack of commitment, I think, from sellers and the extreme commitment from buyers, right? That anytime the market has tried to sell off in the last several weeks, it's even tried this morning, right? I mean, the Dow was down 200 plus points this morning. The Dow ended 270 points higher. So any attempt at a sell-off has been met with buyers going, no, you don't, right back up. So I would be very cautious about going against this momentum and going against this trend, unless you're finding stocks that have been underperforming, they're already relative weak, you're looking for some weakness in the market, and those are likely to be the weak stocks or weak sectors, right? And I just don't see any reason to go against the dominant momentum in the marketplace right now. So if I bring that back to, we can use QQQ or NQ, whatever you want to use. NQ is fine. Let's pull back NQ. And I want to bring your attention to this MACD, this momentum indicator here, right? So look at current price, right? Look at the all-time high and look straight down to those correlating swing highs. It is true that the current price is lower than the all-time high. That is true. But momentum suggests this thing is not slowing down, right? The momentum in the market is very strong. And it might be because we've had such a massive rally in the index that all the momentum right now is just short-term based. But this again gives me a warning sign. Like, well, the momentum here says it wants to go up, even though price hasn't shown us that yet. The momentum suggests price wants to push higher, right? Similar to when we had equal highs. Oh, let me get my drawing tool back here. So here's your first high, all-time high. Here's your second high, same as the all-time high, double top. What did those correlating swing highs tell us? They said that the market doesn't want to go higher. It doesn't. It wants to go lower. The momentum has died off to the upside. It wants to go lower. Even though price hasn't indicated that yet, momentum says price wants to go lower. Right now, momentum says price wants to go higher. So put all those things together and the overall sentiment in the market and some of the news that's been obviously around the 90-day pause on tariffs, which was implemented here, which caused the biggest day in the market rally. And then just a few days ago, the pause on the 90-day pause on the China tariffs and the extreme decline in tariffs of goods coming into the US and goods coming from the US to China. And so I don't see any reason fundamentally to try and short the strongest index in the market right now. Maybe short some weak stocks, but so all that kind of makes sense, Rafael? And to everybody. I mean, if you have any questions, comments, concerns, opposition, confusion, I just think that, you know, what we're trying to like by trying to go short this index, to me, a good analogy is you're standing on the busiest freeway in your home state, right? Your hometown, your busiest freeway. For us here in Southern California, that would be the 91, that would be the 5, the 405, the 101. I mean, all our freeways are busy, but you're 405. That's right, Tex. So that'd be like me standing on the side of the 405 and saying, whoa, is that a $5 bill out there in the middle of that freeway? Nudging my buddy, is that a $5 bill out there? Get some binoculars out. That's a $5 bill out there. That's a $5 bill floating around the freeway of the 405 and traffic's just doing this. Zoom, zoom, zoom. That's a $5 bill out there. I turn to my buddy and I say, I think I'm going to go grab that $5 bill. Your buddy should say what? If you have a good friend, you should say what? Are you freaking nuts? Right? Are you nuts? You're going to risk your life for a $5 bill? It's $5, bro. They should talk you out of it, right? Now, there's a chance that I can frogger my way out to that $5 bill, grab it, and get back on the shoulder, fine. But I'm taking an enormous amount of risk running out there in the middle of all that traffic to try to pick up a $5 bill. Ian learned a long time ago in this game, don't try to pick up nickels and dimes in front of a bulldozer. That's right. Chuck, I love Chuck's statement around this. He's like, there's just 3 things you just don't do in life. You don't pull on Superman's cape. He's going to whack you and send you to next Tuesday. You don't spit into the wind, or piss into the wind if you want to call it that. And you don't short near all-time highs, especially in the strongest index out there. Right? So you're taking a lot of risk if you're trying to short in these markets without some sort of additional confirmation that the market is just through with it. And I don't think we have that yet, right? This is my personal take on shorting the indexes right now. Hopefully that's helpful. Stop playing in the street. But Ken, there's a $5 bill out there. These are good. Average speed with no traffic is 75 on the 405. Yeah, and I'm not quite sure why it's called rush hour when no one's moving on the freeway. I don't, that doesn't make any sense to me, right? So I'm confused because in my chart, NQM25, which is your June contract, has not broken out. So I see what you're saying there. Now, this is just the contract specific. The NQ is a continuous chart of all the contracts, not just the contract specific. So, but NQM25, yes, you're right. It hasn't broken out of supply. So you're right about that. But the whole conversation we just had still applies. You've got basing in supply. If we don't drop out of this supply, now you could wait for confirmation and look to short as you're coming out of supply, but you're still going against the momentum. You're still going against that. Now, believe me, I would love to see a pullback here. I think that's a great place for the market to pull back. But trying to go counter trend in the context of the strongest index with the most momentum to the upside is still like trying to grab that $5 bill in the middle of the freeway, while traffic is zooming by. The higher probability when you're going counter trend like that would be if momentum did not display relative strength. Possibly that would be an indicator of maybe the market's not going to, surpass this supply. But going counter trend is a rough game to play with the momentum as strong as it is to the upside, right? So that's kind of my thoughts on that. Great question, though. Great question. All right, another question after that came in from Miral. What's up, buddy? Which platform is great these days? Yes. Continuing on. TradeStation for multi-time frame. What do you mean multi-time frame? Like multi-time frame charts, like being able to see multiple charts at the same time? Is that what you're asking, Miral?
Yes.
Yes. Well, you can do that in a lot of platforms. You can do that if you pay for a platform, a charting platform like TradingView. You can have multiple charts there. Thinkorswim, if you're using Thinkorswim as for instance, because that's what I have up right now, and that's what I trade off of for multiple charts. I have a grid up here. I have this grid selector that says you can look at this many charts at once if you want. Right? Or if you want 3 charts, you can look at 3 charts. You could have a daily, a weekly, a monthly. You could have an hourly, a daily, a weekly. You could have a 5-minute, a 15-minute, an hourly. You can look at grids. Most charting maybe not most, but a lot of charting platforms that are meant for active traders are going to support grids to look at multiple time frames at the same time, right? So and TradingView does that, but I think you got to be on the paid side, the paid platform side, which they have sales all the time to pay very little for TradingView charts if that's what you're looking for. Now, if you're asking also about so TradeStation multiple time frame options of TOS or Tradier, where can we trade SPX and VIX? Well, we can only trade SPX and VIX options. So let's start there. You can't trade SPX outright. You can't trade VIX outright. You can trade the derivative of those, which is VIXE, VXX, some ETF on the VIX. You can trade SPY or some derivative of that. But if you're talking about trading SPX and VIX, you're talking about trading options on those markets. So the question is now geared toward where's the best place to trade options, or where's the best place to trade futures? And for me personally, I'm quite biased to Thinkorswim for options. And here's why. I've never met another platform I'm not saying it's not out there, but I haven't found one that lets me place my entry on an option spread, followed by an OCO bracket order to exit my option spread with conditions on the premium price, conditions on the underlying index as a trigger to exit. So using conditional orders on spreads with OCO brackets so that I don't have to babysit my trades if I'm away from the house, if I'm in a mentoring session, if I'm recording music, if I'm in a trading room. I don't want to have to babysit my trades and wait for an alert to go off to then come back to the platform and actually enter or exit the trade. So Thinkorswim is the most advanced platform I think you'll find when it comes to the advanced and conditional order entry features for options. Hands down, my favorite. Now, with options trading at Thinkorswim, you're going to pay a 65-cent commission. It's a standard rate per contract for your option trades. Tradier's big draw, for instance, Tradier it's no commissions for option trading. Unlimited option trading for, what is it, $10 a month subscription or something like that. There's a huge draw there. I love that. But they don't support OCO conditional orders to exit spreads. So now I've got to set alerts and babysit my trades and be available if one of those alerts goes off that my stop is getting hit or my target is getting hit. And if I'm at the grocery store and my alert goes off, it's like, oh, I got to drop everything and get home fast. And if my stop is being hit, I got to hope that it doesn't get worse by the time I get home. So for me, until Tradier or TradeStation or whatever options platform that you choose to look at, until they support OCO bracket with conditional orders on spreads, I'm sticking with Thinkorswim. And I'll pay the 65-cent commission to do it. However, even though Thinkorswim supports futures trading, let me show you why I wouldn't trade futures here. Let's take ES, for instance, right? Let's say I'm going to try and set up a S&P futures contract, right? Long position, short position, doesn't matter. I'm just going to use the demonstration here. If I go to send this order, this tells me that at Thinkorswim, for me to go long this S&P mini contract, that Schwab is going to tie up $25,000 to maintain this position. To me, that's absurd, right? I mean, this is a leveraged instrument. I want to get as much leverage as possible, but it's absurd for Schwab to tie up $25,000 to maintain a futures contract position. In comparison, TradeStation, I don't know right now with margin, but I think they tie up somewhere around, is it $1,500 maybe? Who trades at TradeStation here futures? Tex, I know you're at TradeStation, but do you trade futures over there? What is it, Ian? 16,000. Okay. So that's better, but that's not great. If you go look at somebody like, now Tradier is new to futures, but I think they have some pretty decent margin requirements on futures. But you take a look at something like AMP futures. I'm just throwing this out. And they got a ton of positive, Trade of 8, right? Is another one. So AMP futures, let's see, ultra low pricing. I'm looking for margin requirements, margins, micro, mini. Wow, they're tying up overnight 24,000. Day trading is $400, right? By the way, the intraday margin at Thinkorswim, I don't think changes. I think it's 24,000, 25,000 all day long, all night long, right? So the margin requirements are really going to drive my decision for who I'm going to choose as a futures broker, right? Trade of 8 has a discounted margin during trading hours. So what are their? What's Trade of 8's margin requirements? I don't know if you know offhand, throw it in. Otherwise, I'm going to come up here, go to margins. I'm going to go to S&P. $500 intraday, 16,000 overnight. right? So what drives what I think should drive your decision on who to use as a futures broker would be how much money do they require for me to maintain futures contracts intraday, and if you're swing trading futures, overnight's an important one to look at, right? Who is Tradier? They're kind of a new kid in town. They have this platform called Tradier Pro, which seems okay, seems good. Tradier, they're built for options, but they launched futures trading and portfolio margin on trading not too long ago. But I think they even have some decent margins on futures contracts as well. They're kind of new to the game. Their platform's pretty good. I think they're obviously trying to improve it all the time. But Tradier is just another broker. Lee, do I know anything about Tasty Trade? Not much. I had a paper, like a virtual account with Tasty Trade. But Tasty Trade is built by Tom Sosnoff and his team. Tom Sosnoff was the original builder and founder of Thinkorswim. He sold Thinkorswim to TD Ameritrade for like $600 million, started Tasty Trade, and now it's just another platform. It's an options trading platform. I don't know if they have futures or anything else available, but it's good for options analysis, right? I have no idea if they trade futures either. But yeah, they have great options analysis tools. Thinkorswim has great options analysis tools. Interactive Brokers has terrible options analysis tools. I don't like their charts at Interactive Brokers at all. They might have some decent margins on futures. I have no idea. Our hedge funds at Interactive Brokers, and we are not allowed by our SEC exemption. We're not allowed to trade futures in our hedge fund. So it's all options and stocks. But Interactive Brokers is basically it's an execution platform. I don't think anybody uses it for analysis, right? IB is cheap, and so is their platform. I would agree with you there, Ken. If not for the high interest they pay on cash and the administrative outlet that they provide hedge funds, money managers, and administrators of those funds who work to get statements out and calculate end-of-month performances and things like that, I don't think Interactive Brokers would exist, because that's all they really do that's any good, is accounting and back-end machine readable data from monthly performance and fairly inexpensive commissions and interest on cash, right? I think those are the only things they actually provide. And don't get me started on their customer support. So that help, Miro? That help?
Yeah, thank you so much for answering.
Yeah, my pleasure.
Yeah.
Heard good things about TC2000. I've heard some things, but I haven't heard good or bad. I don't know. I've just heard the name. I don't know about TC2000. That I don't know about. I've heard things. I just don't, good or bad, I don't know. Greg, you mean customer no support? Well, not only is it no support, like the customer service reps, when I was not in the hedge fund space, which they would consider a professional space, when I had an Interactive Brokers account on the retail side, they're very condescending at Interactive Brokers when they talk to you. They talk to you like you're less than. And some of these guys might have been market makers or floor traders and things like that. And, you know, it took every ounce of my soul and bone of my body when I was talking to somebody at Interactive Brokers about how you build spreads. The way you build spreads in their options platform is backwards compared to every other platform in the world. And I was like, this doesn't make any sense to me. Like, why would anybody do it this way? Every other platform in the world does it this, and why is it backwards here? And he's like, oh, it's not backwards. Everybody else does it backwards. This is how we did it on the floor. And he said it and said, this is how it's done on the floor. And this platform is really built for professional traders. And it took every bone in my body to say, so you're answering phones now. That's what you're telling me? You're answering phones, customer support. Don't talk to me about trading on the floor, you piece of. You're answering my call on the retail side. So I get it. You might have sucked on the floor, and that's why you're here, right? Don't talk to me that way. You know what I mean? But they're extremely condescending when they talk to you. I mean, maybe not everybody, but for the most part, they just kind of brush you off. But you don't pay much at Interactive Brokers. So, you'll get great customer support at Schwab and Fidelity, but you pay a little more over there. All right, fantastic. You get me on a roll there, and I'll go down rabbit holes. So we don't
On
want to do
that
that.
note, Corey,
Yes.
it's been a long time since I've called support at Thinkorswim.
Okay.
How are they doing since they rolled over to Schwab? Are they still the traders that you call when we're still Fidelity and they answered all your questions like a real trader would answer your question, or did they change?
I think it's all the same, man. I think like some of the guys that I had interactions with over at TD Ameritrade when they were transitioning or about to transition over to Schwab, all the TD Ameritrade people were still going to have jobs at Schwab. So I think they all just kind of merged and they all still have jobs. So I think they have fantastic support still. I haven't had to interact with the Schwab support guys, I don't think ever so far. But yeah, my last interaction with the TD guys is they were all moving over to Schwab. They were all going to still have jobs.
I got the same situation. I have not interacted with support since Schwab took over, and that's only because I haven't made mistakes on my trading anymore. But they would always correct my orders for me. They would always, walk me through what I did wrong on my conditions or whatever, and they were fantastic. They always caught every error I made.
Yeah, I would expect nothing less from a Schwab, because I think a lot of the same guys are doing a lot of the same support. So I would expect the same. Tech says Schwab is great on service. I think it's the same people. Yeah. I mean, I'm sure they merged with Schwab guys and TD guys, and they're all merged. So if Schwab was good and TD was good and they merged, they're all still good. That's kind of what I would expect. And Schwab, it's Tex, it's good to hear that if you've had to interact with them, you've had the same experience. So that's great. I love it. All right, looking for questions. What did I miss? Let me go back up here. Ian made a comment, although I don't forget these days on lower time frames, the machines are programmed to work against us. That's probably true. Probably a little bit true. People always used to say to me, I feel like if I place a stop loss in the market, I feel like the market makers in the market's going to come after me and they don't like me and they're going to hit my stop. I'm like, it's not just you. It's just that everyone in the world has been trained to put their stops in the same place, right? Certain percentage below support, below this pivot, below this demand, above this supply, above this resistance. And so they just, over time, they just know where people are placing their stops. So they'll do liquidity sweeps and just wipe out everybody's stop on purpose, right? It happens. So what's the answer? Just don't use stops. Yeah, who needs them? No, don't do that. I'm teasing. That's terrible advice. It's a joke. Now, if you trade options and you build your option trade to be no stop, take all the risk in the option trade because the reward potential at your target is worth it. I love that idea. Like, don't even bother with stops. If you set up option trades that have a guaranteed max loss of a certain amount and the reward potential is worth losing the whole amount, that's great. I love setting up trades like that. When you can build them like that, but you can't always build them like that. But I like it when I do. I try to anyway. All right, what else we got? Let's see.
Corey, it's good to see you again, man. It's been a while since I've been on here. I moved to Hawaii. It's really hard to get on with your sessions now.
Oof. How's Hawaii?
I love Maui. Oh my God.
Yeah. What prompted you to move out there? Was it is it retirement? Is it work related? Is it family related? What you got out there?
Kids grew up, they went to college, and I got an offer for Hawaii. So I said, you know what? I could use a surfboard.
I love it. I love it. I love it. That's amazing. But you're right. The market opens at 3:30 in the morning out there.
Oh, it does. So yeah, and that's when I trade futures.
3:30 in the morning. My goodness.
Yes, sir. I'm addicted. I can't stop.
What about the last hour of the day versus the first hour?
I am mixing in the Asian section because that's 2:30 in the evening for me.
Yeah, there you go.
And sometimes gold pays me well in the Asian session. Oh, it's been fantastic.
I believe it. I believe it.
Still struggle to get back into options. I did get a quick $1,000 on Nvidia, so that was good. But
Great. Good.
I haven't switched over to Tasty, although that platform is pretty. I don't know if you
It's
looked at
pretty.
it, Corey.
It is. But I also, to my earlier point, I don't think they support OCO bracket orders with conditions on the underlying to exit on spreads. I don't know why that's such a thing that platforms
Plus
like
Tasty's encourages you to sell instead of buy. I'm more of a rights guy instead of obligation guy. I struggle with those guys over that.
Oh, same. I like selling options. I love selling options, but I need to have a stop on it. This way, if the market goes against me, I need to unwind that position. And 100% of my trades, from a stop loss standpoint, especially, every one of them, debit spreads, credit spreads, you name it, naked puts, cash secured puts, you name it. 100% of my stop losses are based off of not a premium amount on the option, but on the condition that if the stock violates this price, close my option position at a market or limit order with an offset. It's quite an advanced order. Thinkorswim can pull it off. They do it really well, but that's what I would need to change platforms. I would need to do that. Right. And I don't think Tasty supports that yet. TradeSarmy definitely doesn't, but I haven't seen evidence that TradeSarmy supports using conditional orders on option spreads to close if this underlying stock or index that I'm trading violates a specific price. Everything's based on premium over there. So, yeah. But I mean, other than that, the platform looks fantastic at TradeSarmy and Tasty Trade. And their analytics at Tasty, I think they did a really good job at their analytics. Rich asks, do I use any software to track your options positions? Like a journal, like closed options positions, Rich? Or like active options positions? Active. So in the hedge fund, yes, the answer is yes. So, and I track, so there's a couple things. So I have my own personal accounts. I have, which are really part of the trading room accounts and the Wealth Essentials account that we have at TradersArmy. But then I have the hedge fund as well. And I have separate journals and separate trading mechanism, trading, active, trackers for those. And for the most part, I use spreadsheets, right? So if you've been with us for a little while, here's our Wealth Essentials spreadsheet that I use, which tracks the underlying symbol, entry date, price at underlying, and this is all manual entry. You can see where we, closed positions and how much profit we've made or lost, how much profit we've made or lost. And, so I mean, the spreadsheet thing has been around for a long time. I've developed and I built this spreadsheet and I built, stock holdings, covered call spreadsheets, option calculators for rolling trades, analyzing free rolls, rolling shares of stock back into short puts. I mean, I've got spreadsheets for days, right? And the hedge fund also keeps active spreadsheets on all of our positions. But in addition to that, as a backup, I also use an online platform which only technically tracks executed trades. So it'll auto import trades that you'd made. And so you'll have all the entry details there and you can go in and you can put notes and all that stuff. Let me show you that. Where is that? It's called not TradeLytics. That's coming soon. Don't worry about that. One of our members is developing TradeLytics as an actual journaling platform. It's amazing. But here is TradesViz, and this auto imports everything. So every trade, so you look at tables, trades, right? So it'll auto import all your details of your trades, the opening, the closing, the commissions and everything. So this allows you to get kind of, and you could place notes. So if I wanted to go ahead and view where I entered, where I exited, if I want to put notes on the trade, I could come in and add notes. So this is a great place, add notes, and you could, kind of add tags to it and all that kind of fun stuff. So TradesViz has been really good to us. TraderView is another one. They're kind of expensive in my mind. They're $40 to $50 a month. TradesViz, I think we pay $200 a year. TraderSync, I think TraderSync is another one that's not too cheap, not too expensive. It's kind of in the middle here. But it's but this tracks everything, and it auto imports all the details of the trade. So the only thing you have to go in there and do is basically add whatever notes or tags you want. So you can add tags like, oh, this was a bull call spread, or this is a bull put spread, or this was a short put, or add all your entry and exit notes, why you got in, why you got out, any mistakes that you made, what did you learn. So TradesViz is fairly inexpensive. They've got way more features than I've ever explored. They have AI built in that can help you identify areas of opportunity, kind of like an AI mentor, an AI coach. You can drill down to specific stocks. You can say, just show me all the trades that I've made on Apple or Nvidia or whatever it happens to be. So this is kind of a good one too. So between TradesViz and spreadsheets, I like those two.
How does that TradeViz look for an options trade, for like a spread or a single leg?
So it looks like this.
For
So
an
if I go
active, for an active trade, sorry, I should have said that.
yeah, so let's pretend that I got on, well, not pretend. Let's say that I've got, so I'm going to go into, let's go to Delta. So Delta, I type in filter, there's Delta, apply filters. And so here's the trades that I have on Delta, right? And so some of these are like, are still open right now. Some of them are not. So let me see what's still open.
So it doesn't show you that's open.
Well, this says close timestamp.
Oh, it does, doesn't, yeah.
Yeah, close. So open timestamp, close timestamp. So, but really what I need to do, which I haven't done on Delta, I'm aware now, is Delta was the position that we sold puts on. So let me walk you through this. We sold puts on Delta, and then the price started to drop, and so we rolled those puts, and then price dropped, and so we rolled those puts again, and then we got assigned on the shares of Delta, and then we started doing a stock repair strategy on Delta because it got down well below our assignment price, and so that's the position that we're in now on Delta. So really, this position started in March. So what I can do is I can go through and I can say, okay, here's where it all started, March 11th, 2025. And I can say, well, this trade, this trade, this trade, this trade, this trade, it's all part of one initial trade followed by roll after roll by repair. And I can actually merge all of these, right? So I can merge those so I can see the total net of all of our management executions, but these two are still open, right? So I'm still open, so it hasn't recorded any P&L because you're still in it. And so here's a short call, here's a long call, and then here's some more positions that we have, which is part of the stock repair. So it takes a minute to get used to it and jump into it, but yeah, these are still open and these are closed. So it'll mark that. And then I've got tags over here, so you can add and customize your own tags and things like that, which is pretty cool. But like I said, there's a lot more in this platform that I have yet to explore. Our primary purpose for signing up and using TradesViz was as a backup to our spreadsheet. So our spreadsheet for the fund is we track our daily P&L, our portfolio dashboard, which I've kind of broken a few things in here, active option trades. We've got different trades, so daily condor trackers, we got calculators. So I use a lot of spreadsheets, but as we know, spreadsheets are subject to clerical errors. And I've found some clerical errors in our spreadsheet. And when I didn't enter information fast enough, and I got to go back and find the trade. And I go over to TradesViz and I find the trade and I say, what was the actual trade? And then I can type it into the spreadsheet. We were hoping that we could abandon the whole idea of using spreadsheets and just use TradesViz, but we do too many different things personally to abandon the spreadsheet and just use TradesViz. So we use both and we refer to both, right? And this way, if we forget to do something or mistype something in the spreadsheet, we could always lean on TradesViz. Also, what we like about the spreadsheet is we take massive amount of data in the spreadsheets that we're tracking all the time. And we track it so we can try to improve all the time, right? So we track this data and then we can compile the data into a machine readable, ChatGPT, machine readable format, throw that or upload that spreadsheet into ChatGPT, and then we can ask it questions about the data that we fed it in terms of, different things that we could do to improve the trade entry, the trade exit, the management, all these sort of things. And so I always like the spreadsheet more so than ever now because of ChatGPT and our ability to import that data into ChatGPT, and it spits out very quick analysis over all the trades that we have made and how we can improve upon that. Right. So I don't think I'll ever abandon the use of our spreadsheets. But which is here. And I got a lot of them down here. And some of these we don't use. Some of these are just like back testing stuff and things like that. But look, we imported 400 and something trades with all this data of all closed trades, uploaded it to ChatGPT, and we spent hours and hours and hours and hours and hours interacting with ChatGPT on, well, if our entry timing was this and certain indicators were this and the outcome was this, and we went through days and days and days of data. And for me, it's easier to keep track of a spreadsheet, upload that data, and interact with ChatGPT using the spreadsheet. Right? So we're not fully relying on TradesViz, but we could if it weren't for this aspect of it. Rich, does that make sense? Oh, text took off. I didn't see that. All right, see you, text. Awesome. All right. Sweet. Is it the top of the hour already? Oh my gosh. I think I've got everyone's questions. Yeah, just looking back through the chat box here, I feel like I got everybody's questions in. See, easy to take up a whole hour, right? Good news is we do this every other week, so we have more hours in the future to answer more questions. Steve Hall, I didn't see you there. What's up, buddy? Let's see. Yeah. Well, I've answered all your questions. Anybody got anything last minute to kind of wrap this session up? If not, I'll get you on your merry way to enjoy the rest of your evening, your afternoon. For you, Rich, it's afternoon. It's not even dinner time yet. You probably have a surf session coming up here as soon as we're done. But it's about dinner time for me here. So in Southern California, so it's about that time. And it's about bedtime for some of you guys on the East Coast. So if you have any questions for us here, always reach out, support@tradersarmy.com. We're happy to help everybody. Just email us, let us know what you need. We have our Discord channel. You can text us at the number on the website. If you are not a member of Traders Army, on demand or pro member, one little last minute shameless plug here is if you want, number one, supportive community, you'll find no better place than this. Number one. Number two, the amount of content that we provide at the membership rate. So if you go down here to Traders Army, what we do, memberships, the over 50 hours of on-demand content focused on stocks, options, futures, cryptocurrency, wealth management portfolios, things like that. It's unparalleled for $149 a month. But what I'm going to do here is I'm going to put a promo code in the chat box. It's Trader60, Trader60. We'll get you 60% off your first month. I do have some summer promos coming up. For those of you who are newer members or planning on becoming members more permanently, grab your 60% off first month. Look out for some of those summer promos, and we'll have some good deals there for membership. If you're just interested in starting with on-demand content first and you're not going to join the live trading rooms just yet, you could always start off at $49 a month on demand and then bump up another $100 and get 8 weekly live trading and analysis sessions covering all asset classes, private trade feeds, options deconstructed, that's options specific, wealth essentials portfolio trackers, all this stuff, all the spreadsheets that you saw, those are all downloadable. You can have those to track your own trades. All that you get as a part of your pro membership. So I have people telling me that's too cheap, and I'm like, probably, but I don't want your investment in your education to force you to make trading decisions that are against high probability just because you're trying to earn money back that you're spending. We want the cost of entry, and we want your investment to be the low barrier of entry, so that, you know, if we can't make you $149 a month to pay for this, you shouldn't be a member anyway. But we believe that we can take you well above that. If that takes a month or 6 months or a year, whatever you're at in your trading journey, we believe that we can help. And so if you're seeing good stuff in here and you want to be a part of the community, this is where you do it. What we do, memberships, Trader60 gets you 60% off. All right. That's it. That's all I'll say about that. So thanks for letting me do that. And other than that, I'll see you guys in next week's trading room. If you have any questions, let us know. Have a great weekend if I don't hear from you in the meantime. And we'll see you in a couple of weeks at the next Stocks on the Rocks. Be good, everyone. Have a great night. Later on.